All right, the first thing we're gonna do is jump right into the Nasdaq 100 and the SP 500 with exactly how we were trading on the day. Now, we had a lot of flack about what was happening, how we expected us to move, and ultimately what's happening over basically the past 24, 48 hours, give or take, and how we started pushing up. Now, let's talk about exactly where you went. You came right to our demand zone over here, and I want to highlight right now that I did not even have this one marked out. This comes right back to a Discord member right over here named Special K, and he absolutely slaughtered it right at open. I even doubted him, but guess what? Supply and demand typically prevails, and guess what? You rejected right off this to the T, and kind of the rest is history. If you're not following on Twitter, I recommend doing so. Link is down below. But as you see what's happening here, we come to that level, and it's been an absolute bloodbath. Let's talk about exactly what happened on the day. You came to this level, and then at this morning, you had big earnings from banks. We talked about this yesterday. We had JP Morgan, Wells Fargo, Citigroup, and a few others. And they didn't report necessarily terrible earnings, but they did not report great earnings. But it's also important to realize how they've adjusted their expectations into these earnings. And then it's also important to realize they did not release any forward-looking statements. That's very important to know. Before we go any further, I have to ask you to consider doing two things: liking and subscribing. Every single day, I make videos for you. I make also shorts, which are educational for you as well. But I keep you updated on the market, so you are never in the dark with news coming out, and you always know what to expect the next trading day. Let's get into this. So again, we started coming down here as well. Going to the economic calendar, we had some things coming out here as well. We had retail spending, which we need to be watching. I'm going to talk about that here in a second as well. But then you have Michigan consumer expectations. This was a really big surprise. No one really expected this. But now you're seeing consumer sentiment finally coming around, realizing we don't look great. Now, what is there to realize and what's happening as we speak? Looking at the broad scale market, I'm going to get back to the charts, but what is the Fed telling us? We need to see unemployment rise. We need jobs to start shrinking, correct? We need that to happen. And when that happens, you expect consumers to get hit as well. However, jobs aren't getting hit quite yet, and consumers are already getting hit. This tells us this could be a not so soft landing, spoiler alert, as they thought, right? And so obviously this hit the market, almost giving up everything that you took on the previous 48 20 some odd hours, right? So boom, right back down to the trenches. Now, as we look at this, again, with yesterday, I told everyone I didn't have expectations of being bullish, right? Now, I didn't expect a clear drop on the day. I did not. But it was important to realize I was not bullish from there, because as we look at the trend and as we really zoom out, you're obviously still bearish. You're making lower highs, lower lows. It's a trend for disaster, right? And there's no real area of the market that looks quote unquote promising. So I want to make sure that's known as well. So as I look here, going into next week, I'm going to be really blunt with my expectations. I do expect more downside. And I'm going to tell you the biggest reason why. And it's going to be earnings, people. Over the next few weeks, earnings season is coming back up to the plate. If you want to see all these earnings, I'm not sponsored by these guys, but I recommend using them. This is who I use to keep up with all earnings, and they kind of have a hot list of the earnings coming out. You have Tesla next week, Bank of America to start the week. Amazon is not until the week after, but you also have Netflix this coming week as well. And then the following week, you have Meta and Amazon as well, and then probably Apple as well. So those are going to be big earnings coming out. I anticipate consumers to be slowing down across the board. Okay. Now, I don't like people to trade, and I don't trade based on assumptions. I trade based on facts and where buyers and sellers are showing up. But as of right now, I anticipate sellers to step in, and I anticipate consumers to step out, basically, right? So let's talk about where we're at. We talked about this yesterday. Let's get into a full scale chart here. If we look back, this is your June low, your previous 52-week low on the Nasdaq. And then we can see this is where we were hitting yesterday, right? You ended up popping up, hitting this next demand level, and boom, shooting down. Okay. I want to highlight you cannot hold above this area, and it's now becoming a resistance. Previously, we wicked below and then quickly remounted. This looks more and more bearish every second of every day that you remain below this. Okay. Now, What also have we established from this as well? And I'm going to go into the Dow a little bit here in a second also, but I want to talk about this specifically. If we come in here and we look at the VRVP, giving you just an overall look of volume, where's the danger here? Okay. You're coming into your first real volume gap. And what does that mean? This means that there's a discrepancy between buyers and sellers, and that this level here looks pretty illiquid, all the way from about 10.5 down to lows of 9.4. I do anticipate you most likely find some support around the 10,000 range on Nasdaq, but I just want to say that right now. So this entire area is very illiquid. So I think if you start to get below this area once again, below and make new lows, I do believe sellers could step in and push you down in a hurry, getting another one of these 500-600 point drop days. And I know you're thinking, Tyler, are you calling for a 600 point drop next week? Are you calling for a 700 point drop? I'm not saying it's going to happen next week, but if you start breaking below these levels again, the 10, primarily 10.6 to 10.65-ish, in my opinion, I expect sellers to step in aggressively, similar to what they did today and the day prior. Okay, I want to make that really, really clear. Now, I also want to show you Dow, and Dow is kind of, in my opinion, foreshadowing what's happening here. Now, in times past, I would think we would all agree Dow would be one of the most protected sectors, if you will, right? More of the well-known protection stocks, defensive. You are already down to your pre-COVID high level, already down here. The SPY, you have the Nasdaq, those are nowhere near there. They're not there yet. Okay. Dow's already down there. I think Dow is showing what's going to happen here. Okay. So we need to be very careful, very vigilant of what's happening. Go to ES to show you food for thought. You're still chilling over here as well. You still have quite a bit of ways to go down. Still have a lot of support there. Okay. Now, next up, I also want to show you the dollar. The dollar has been something for something to watch, to say the least. You look extremely bullish here on the dollar. You look like you want to make new highs. You want to continue this run, continue this absolute tear. On this pullback, you can also see, we'll just throw in really quickly the SPY so you can see how this directly affects the movement of SPY. You can see as you pull back right here, you can see, boom, guess what? You had a nice pop up here on SPY, and as you bottomed out, guess what? And you started going back up on the dollar, SPY went right back down. Watch this, very important. As you get a breakout here, I think it lines perfectly up with a major drop on Nasdaq and the S&P. So what would I be watching? Am I telling you watch the dollar vigorously and that the dollar is going to go to the moon? I'm telling you to watch the dollar vigorously. That's what I'm saying. I'm not saying you're going to go to the moon or that everything else is going to get torched, but I recommend you pay close attention to the dollar because this is directly affecting everything else. And I'm going to have some stocks here for you to look at as well. J&K. J&K also one of my favorite things to look at as well. Junk bonds we've seen. And it looks like you are getting prepared to absolutely get torched here on a risk-off viewpoint. It looks like you're about to get torched on junk bonds. It looks like you're getting ready. You're about to lose this line, lose this support, and boom, get torched. You've already broken below your previous 52-week lows back that you had with June going into July as well with the Nasdaq and ES. You're getting hit here. It's absolutely terrible. Yields as well. This is one of the biggest red flags, if you will. Yields are moving way too volatile. You have to look at this on a daily time frame. We can't go a little bit shorter. But if you look here, yields are too volatile. They should not be seesawing back and forth. Okay, so when we go to this inversion, I want to show you what's happening here, which is also queuing up for a lot of volatility. If you've been here since the last time I mentioned this, then you'll understand. The last time I mentioned this type of sideways action here on yields was back on September. Go look back at these days, or go look at the 9th and the 12th, I would recommend for my videos. I don't know. But go look back at those videos. I told you, when this starts to happen and you start to consolidate specifically with these yields on the inversion, specifically the inversion, what happens? A lot of volatility. Your past three indices, look, boom, boom, boom. Volatile, volatile, volatile. And it's happening again right now. Now, I'm not saying you're going to go crazy to the upside, but I anticipate a lot of volatility here. I don't see news that could really benefit the market. Even if, let's hypothetically say, earnings come out next week and they're great. I don't think that helps the market because we still know that we're going into a recession. And just so everyone knows, people were questioning what I was saying. And again, everything that I say here, it can really be found with a quick Google search if you want to fact check. And I recommend that you fact check me, by the way. But JP Morgan CEO recession, all you got to type in. That's all you got to type in. There's so many articles. And we'll just go to the latest one day ago. Reuters. Haven't even looked at it. Keep saying inflation, the rates are going to rise above 4.5%, and he warns of an inflation recession continuously. I'm not going to pay for this, obviously. But if you go back and you just look at what's happening here, keep saying 2 days ago, a recession is imminent, okay? So I don't just say things, but also too, I really recommend fact checking, not just what I say, but what other people say on this platform, because unfortunately people lie and they like to say things to get ahead and to get views. And I never want to come across that way, but I always recommend that you fact check. And I want you to be able to trust some of the stuff I say here so you know as well. So please fact check things people say, and especially what I say. So looking at that, I do expect volatility here as well on the inversion, which has been the best overall signal of inflation and a recession. People, this was the ultimate indicator for massive downside to come. Okay, so we've gone over the market. We've gone over expectations. And again, people won't know my SPY target. 339, 340 roughly is my target pre-COVID highs. From there, again, it's going to get brutal if you break below that. But let's go into my favorite stocks, my favorite picks, what I'm looking at for the week, etc. Boom. First up, Netflix. Netflix, they got earnings, but I love them because they have earnings, actually. So let's talk about what's going to happen. So I believe you have earnings on Tuesday. I could be wrong, pretty positive. I know Tesla has earnings next week as well, and I believe they're on Wednesday. So it's either Wednesday and Thursday or Tuesday and Wednesday. But I know Netflix has earnings first. First up, Netflix. Love it. Okay. What we're looking at here. So there's key levels we've been watching for some time. Okay. I'm going to bring up this indicator as well so you can see. Target number one, 225, 226. The contracts are a little expensive, just so you know. But I love Netflix. I love how they move. You don't have to go super data because you have earnings, and I'd be getting out of this play before earnings if I'm trading it. Target number one, as well, like I just said, 225, 226. From there, I could see you getting volatile down to 212. Now, I want to highlight this week, the reason you're propped up is because they were pushing out all their good news prior to earnings. Bad move, Netflix. My opinion, just going to say. Now, they pushed out how much they made in the UK. They started pushing out what they're going to be making with this ad revenue. They pushed out that they're going to be pushing this new ad revenue stream of income very soon. They have not started this. Important to know that. But they're not highlighting the users they're losing. They're not highlighting the search results on Netflix. Those have all decreased. So I anticipate them to have rough earnings. And I anticipate them to kind of drop into earnings with the market. So I'm anticipating downside here. Stops would clearly be above 238. And I think that really ties your risk so you're not getting too out of hand. But that's what we're looking for here. Drawing this up as a risk reward standpoint, your ultimate levels down here, your stops locally above here. Still a 2R trade. If you're looking for a short term to here to there, obviously I'd be tidying up to around 233 as stops, keeping it really nice there as well. So next up, we're going to be looking at some of my others. Microsoft, this is the one I was really eyeballing all day. And if I'm looking at something like Microsoft, I'm going dated personally. It is what it is. I did a really deep dive on our live stream today. And if you want to catch the live streams here, they're free. But after I close them, I don't save them to my YouTube channel. I save them for members of the channel. And that's not really to make a paywall. That's just because the YouTube algorithm hates when I do live content and it'll push me out as a streamer. And I don't want to be a streamer here on YouTube. Okay. I'm more of a news channel. So as you get in here, I talked about this. Short dated Microsoft positions, not the way to go for me. Longer dated positions are killing it. Specifically, November 18th. I love what's happening here. At a bear flag, you broke below your key level of 231.5, and now you're holding below that. As long as you're below 231.2, 231.15, I'm a big bear. I could see coming down to 225, making even new lows here as well. I'm going to show you a chart that looks shockingly similar. And I want to show you really quick. So first off, let's look at what's happened. I want to draw it out for you. These are your previous 52-week lows, right? I want to make sure I'm not lying to you all about that. Make sure, go back. Yes, these are your previous 52-week lows, okay? We've established that. Now, look at Meta. This is one of our favorite plays we were previously talking about. These were your previous 52-week lows. You broke below, retested, dropped, and you died, okay? Remember, we talked about this. As well as right here, very similar as well. Microsoft looks to do a shockingly similar thing. I'd be watching it. I'd be paying attention. I love it. This is what I'm looking at. Nvidia and Semiconductors. If you don't know, basically, I can't remember who exactly it is, but the US specifically, I don't know what the firm is called or whoever is in charge of this. They're doing an investigation on, I believe, TSM, QCOM, and I believe Intel is this third one, but I could be wrong on Intel. I'm not positive who the third one is. They're doing an investigation on semiconductors. When that news dropped, semiconductors got hit today. Semiconductors are probably the biggest sector getting hit right now, and you have a lot of downs. I'm not saying you're on to 79, so just ignore that. But keep an eye out just because they're so volatile, and it's just been one of the best sectors to trade. No key targets here. I'd be looking at 52-week lows to be tested once again. But I think semis are really weak. Long term, they're probably my favorite thing to buy in the long-term portfolio. Short term, downside is probably going to continue, sadly. Personal opinion, you're already seeing demand die down as well, and that was kind of like the nut shot for semiconductors. Next up, last one. Actually, you know what? Surprise. Tesla. We talked about Tesla pretty much for a while, and you just broke 52-week lows, and you're coming down deeper. And this isn't necessarily even a trade. I want to really be watching the $200 level. How you react to this will be very important for the stock if you're a day trader here. So watch how you react here. If we go back to around the daily chart, it's important to realize that this $200 level is going to be significant. If you break below this level, it is almost guaranteed, in my opinion, you will test the 187 to 179 region down here, okay? I want to make that really clear as my next range if you break and hold below 200, okay? Make that really, 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 really clear. That's going to be very important. You break below 200, watch this level because it's going to come very fast. Okay, that's going to wrap it up for me. If you have any questions, please comment down below. Have a good one, traders.